Some of these numbers look pretty good. Some of these numbers look like there was stabilization, particularly the software business that I think John Chen has suggested is the holy grail here.
Absolutely. The software business is improving. Look, 20% improvement in software has a couple of impacts to the company. Obviously, it shows a new revenue growth engine, but again, at a very small percent of the overall revenue today. However, they can continue to grow off that base. It also is a huge injection to the gross margin line, to the net profit line, because it's just a much more profitable business, and it's where he's publicly stated he has to go. So, yeah, you're seeing stabilization, and you are seeing some signs of life in what I'll call new areas of growth and margin enrichment for the company.
Yeah, and so it's interesting because the company's continued to announce new products, which they would have to do, but you still wonder about the long-term focus of those products and what the products, the hardware, means to this business going forward.
Yeah, so it means a lot right now just because of the 40% of the revenue that they drive from hardware. Having said that, I would have expected that the gross margins would stabilize a little bit better because you've got a set of customers that are showing their undying loyalty to this platform, which basically says they could probably test the level of price sensitivity for those customers. So I would expect that, they could probably even raise gross margins a little bit more for those customers. The bigger question is, can they expand the pool of BlackBerry users over time? That is going to be very, very difficult for them to do because, as we've talked about before, Cory, people buy into platforms, and this is a platform people have been fleeing from in recent years.
Well, yeah, so when you look at that gross margin number declining, 2 quarters in a row, the year-over-year decline was, I think it's gone from -8% to -2%, so maybe a little bit better. I don't know. What do you think is driving that? If they're moving more towards software, it should have better gross margins. If they're moving more upstream and away from the cheaper devices where they're trying to get kids to use BlackBerry's as sort of a light feature phone, why would gross margins be going down?
And I just add one thing to your list there, and that is that they're working more with Foxconn, right? So they're working more.
Yeah, they're not making this stuff.
Right, exactly.
Someone else is doing it for them. That should be better margin.
Right. So they're working more with ODMs that are making it. So I think what it comes down to is you got to put some incentive out there to get people to pay up for the platform, right? So you got to get, if you're going to, stay relevant, you've got to be really price aggressive, at least initially, to keep people on that platform. So they're kind of balancing this idea that you have a loyal customer base, but we're also trying to attract people to the new touch-enabled BlackBerry's, right? To the new product they just brought out, the Leap, right? They're trying to get people on those platforms. Those products you got to incent for. The Passport you probably don't have to incent as much for, which is kind of that squat keyboard-based product. And I think that's the push-pull you're seeing.
I wonder what this business, what's there? I mean, when you look back, this show has been on the air not that long, 4 years. 4 years ago, on a trailing basis, BlackBerry was doing $15 billion in revenues. Now on a trailing business, it's $3 billion in revenues. When you try to imagine what this is going to be going forward, if anything, is it a $3 billion company? Is it a $2 billion company? I mean, it's just amazing the pace of collapse, and I wonder what's going to be left.
Yeah, I do think you have to model this as a stabilization, slowly declining revenue business with an improving margin business. And that's why I'm so focused on that margin profile and what that margin profile looks like. Because this business is going to be absolutely, without a doubt, smaller on the top line a year from now than it is today. But is it healthier if it improves margins on that smaller base? I think so, and I think that's what you're looking for as they contribute more from software, which is why they're trying to bring their software to other platforms.